Defaults on solar loans are going through the roof, and solar-backed bonds are trading at below 50 cents on the dollar. That's on top of over 2,000 lawsuits pending against solar finance companies. Does this mean the model for financing rooftop solar panels is about to collapse? I'm going to be answering that question in today's video, and make sure that you watch till the end because I'm going to be sharing with you my prediction on which companies are actually going to thrive in this environment. The smarter way to go solar. All right, now in today's video, we're talking about the collapse of the solar financing model. Now on Thursday, the Wall Street Journal put out an article entitled, "The Wall Street Machine for Financing Rooftop Solar is Seizing Up." And essentially it's talking about trouble that solar financing companies, particularly GoodLeap, are finding themselves in the current solar environment. All right, now the first thing we have to talk about is the difference between a solar financing company and a traditional bank lender. Now, a solar financing company is not a bank. Typically, they will borrow money short-term from banks, then they will use that money to lend to consumers and to fund solar contractors for solar installations. Then they will collect fees, and then they'll bundle those loans up and sell them off to investment funds on Wall Street. Now, the business model relies heavily on the ability to charge fees at the time that the loans are first originated, and to be able to bundle and sell off those loans at a reasonable price to investors that want to hold those securities long term. And yes, that means that many of these financing companies have to charge large dealer fees. Now, I know dealer fees are part of the solar financing equation that we often don't like to talk about. So what are they? Dealer fees are fees that solar finance companies charge to contractors, and the contractors have to pass them along to homeowners in the form of a higher installation price. Now, oftentimes these dealer fees are not disclosed. So the homeowner looks at a proposal and they think they're just looking at parts and labor, not realizing that the price of the parts and labor has been inflated to cover the cost of the dealer fee. And recently we've seen these dealer fees skyrocket. You know, back when I started in solar finance, dealer fees were about 7% of the total contract price. But now we're seeing dealer fees as much as 20, 30, even 40% of the total contract amount. Meaning that 40% of the amount being borrowed is kept by the finance company as a fee before the first dollar is even paid to the contractor. So it greatly inflates the overall solar system cost. Now, on the other hand, you have traditional FDIC-insured bank lenders. And the nice thing with a direct bank lender is they don't have to borrow money. They essentially can lend their own money, money that other of their customers, other of their depositors already have on deposit at the bank. So their cost of capital is much lower. It also means they don't require any, or they don't rely on securitization of the solar loans. A traditional bank lender doesn't have to bundle and sell off the solar loans. They can simply hold the loans on their own balance sheet indefinitely if they want to. And of course, the biggest advantage with a traditional bank lender is that they don't have to charge these high dealer fees to stay profitable. Again, these dealer fees inflate the overall price of a solar installation, and those fees are typically retained by the solar financing company when those loans are securitized and sold off. A traditional bank doesn't have to charge you these fees, and therefore most likely you're going to get the best cost of financing working with a traditional bank lender or a credit union. So what caused the crash in the first place, and what has caused so many borrowers to stop making payments on solar loans? Well, the big issue is the high rate of contractors going out of business. I don't think anybody anticipated on the financing side of this industry of just what a high rate of failure there would be among solar contractors. And there have been hundreds and hundreds over the past couple of years. Of course, some of the highest profile solar business failures. Of course, there was Pink Energy, formerly known as Power Home Solar. Of course, Titan Solar Power went bankrupt last year. And even SunPower, a business that had been in business for decades, declared bankruptcy as well. And so whenever you have these large solar installation companies that go out of business, pretty much all of their customers that have been installed in the past, those customers end up being abandoned. So when we talk about an abandoned system or an abandoned customer, this is basically a customer that had signed up to have solar installed on their home, and either the system never got installed in the first place because the contractor went out of business, or the contractor went out of business after the install and therefore the contractor is no longer able to make repairs on the system, so they have a malfunctioning or a non-performing solar system on their rooftop. Today's video is brought to you by REC. If you're looking to get the maximum performance for your residential solar and battery storage system, then you need to take a look at the new REC Alpha Pure RX solar modules. REC solar cells are built using heterojunction technology, which is a combination of crystalline silicon and amorphous or thin film silicon. The result is a solar module with extremely high efficiency and industry-low degradation rate, all while remaining price competitive. The low temperature coefficient and extra horizontal supports keeps the solar panel performing near peak power even in extreme weather conditions. REC stands behind its award-winning modules with a 25-year ProTrust warranty that covers power, product, and labor. So if you're serious about becoming energy independent, and you want to get the best performance from your solar array, then tell your installer to use REC Alpha Pure RX. The 450 and 460 watt modules are available now at your local solar distributor. By the way, if you signed up for solar panels and the contractor that did your installation went bankrupt, leave a comment down below. We'd like to hear your story. So what we see in a lot of cases is when these solar systems fall into disrepair, the homeowners, the borrowers, don't want to make any payments on the system. And from what I'm being told from my industry sources is even homeowners with very high credit ratings will stop making payments on their solar loans if the solar system is not functioning and saving them money on their electric bill. Now, again, this is a big issue for solar finance companies because their business model relies on their ability to continually borrow money short-term from banks and then bundle and package these solar loans into tranches and to sell those tranches to investors on Wall Street. But the value of those securities, the so-called asset-backed securities, the value of those securities goes down the more and more borrowers choose to stop making payments. And then, of course, we have the issue of the non-recoverable collateral. Now, again, these solar loans are sold to Wall Street investors as so-called asset-backed securities, but the reality is the assets backing them is not really recoverable. So for example, you may have a solar power system that costs $50,000 in terms of your total install cost. In other words, your total loan amount was $50,000. But if you send a crew out to recover the solar panels, let's say you go and want to repossess the solar panels off of somebody's roof when they stop paying, the value of the solar panels themselves is probably only about $5,000 of that 50. Because again, it's used equipment at that point. It can't be resold as a new system. And then there's all the other costs that went into the installation, including overhead, insurance, labor, of course, sales commissions and dealer fees. None of that is recoverable, right? Just the physical solar panels are the only thing that's really physically recoverable, which means that the bondholder is never going to be able to recover their principal. The only thing they can do is sit and wait and hope that the homeowner tries to sell their home, at which point they can try to enforce the lien if there's enough equity in that property. And of course, that's what we're seeing, is that as default rates go up, these bondholders are not able to get paid their interest payments that they're expecting because there's just nothing there. There's no real asset there backing the loans. So what's the solution here? I think what you're going to see is that all of the big solar finance companies, these companies that get involved with charging dealer fees and then they have to securitize and sell off the loans, I think all of those companies are gone within the next 1 to 2 years. And you're going to see traditional FDIC-insured bank lenders take over solar financing. Now, one thing I think you're also going to see change is that there's going to be a specific disclaimer of liability for any maintenance and repairs of the solar equipment from the lender. The lender does not want to be in the business of repairing your solar installation, right? They want to lend and charge interest, and that's their model, that's what they know. But the problem is that a lot of these solar power systems at the time of sale, they are sold with this implicit 25-year guarantee. 25 years of repairs and maintenance from the contractor and a 25-year power production guarantee. The reality is, average lifespan of a contractor is only 6 or 7 years. So these 25-year guarantees or these lifetime guarantees, they're really not worth the paper they're written on. And again, think about it. If you go to a bank and you get a mortgage to buy a home for, let's say, 15 or 30 years, the bank's not going to be responsible to make repairs on your home. If the air conditioner goes out, you pay to fix it. Your refrigerator goes out, you pay to fix it. The bank is not responsible just because they're lending you money to buy that asset over time. Same thing with auto finance. You buy a car with a car loan. If your transmission goes bad, the bank is not going to pay for your repair bill. That's your responsibility as an owner. And frankly, I think that's what you need to understand going into a potential solar investment, is that there's a good chance that the contractor who does your original install is not going to be here 5 or 6 years from now. And so you need to be prepared to take over the operation and maintenance and any repair cost that might be needed for that solar power system. And then, of course, I think you're going to see more use of third-party warranty and insurance providers. Companies like Solar Insure that we've talked about before, where you can basically get independent insurance coverage on your solar power system, not the lender guaranteeing the repairs directly, but using a third-party insurance product where they have a network of service providers that can come out and make repairs if and when they're needed. So again, I expect traditional banks are going to take this over, but there will probably be a specific check mark or place on the contract you have to initial declining warranty coverage and acknowledging that the lender is not responsible for long-term system maintenance. Now, I think this makes a huge opportunity for solar service companies, because as more and more of these solar contractors go out of business, that means you have more and more homeowners that have been abandoned by their original contractor, but are going to need some sort of operation and maintenance and repair service for their system going forward. And of course, as I'm recording this right now, the so-called One Big Beautiful Bill Act has just been signed into law, meaning that residential tax credits are going away at the end of this year. What I expect to see for the rest of 2025 is there's going to be a huge surge of homeowners that sign up and a lot of business that's done by solar contractors. And then I think you're going to see a crash at the beginning of 2026 when all of that work dries up, all of that sales demand dries up, and a number of the contractors that are in business today, I'd say probably half of them are not going to be in business a year from now. So again, that means if you are in a service business where you can do maintenance and repairs and you know how to do that efficiently and profitably, I think there's going to be huge demand and opportunity for you. In fact, if you haven't seen the previous video I did with Nick Sherman entitled Solar is a Service Business, go back and watch the previous video where we talk about this issue in more detail. So this has been a discussion of the solar financing companies are collapsing right now and why I believe that business model is doomed to fail long term. Hey folks, as always, if you're getting good value from the videos that you see on Solar Surge, make sure you give us a thumbs up. Also, go ahead and subscribe to the channel as well if you haven't done so already. That way, as we have new videos like this coming out, it'll come up on your feed so you can stay up to date with everything. Of course, if you're a homeowner, if you're in the market for a solar power or battery storage system, especially if you want to get one installed this year while you can still take advantage of the full 30% federal tax credit, as always, feel free to reach out to us on the link below here. You can set up a call with a Solar Surge expert or just use the free online calculator tool to see how much solar and battery storage costs in your area. Well, that does it for today's video. I thank you all for spending some more time on the Solar Surge channel. And as always, I'm Joe Ordia here, encouraging you to get prepared and be empowered. Thanks for watching, and I'll see you on the next video.